Hello traders, welcome back to our YouTube channel. It's a new year and we at First Mastermind want to wish you guys a happy new year and a prosperous year ahead. Without much ado, in today's video we're going to be talking about the weekly outlook where we're looking at DXY, EURUSD, GBPUSD, GBPJPY, XAUUSD and US30. So without wasting much of our time, we're going to head into the video where we're going to be looking at the fundamentals and the technicals, what we're going to be expecting for the week. We just had a very wonderful week because NFP just happened, and after NFP has happened, the market is going to come back to its normal state. So we're going to be analyzing the market and see what we'll be expecting for the week. So for the week ahead, we have lots of fundamental. We have very high fundamentals that we can see. We have on Monday there's no news. On Tuesday we have the CPI for the year of the year coming in on AUD/USD, and on Thursday we have the CPI on USD and unemployment claims coming in on Thursday by 2:30 p.m. and on Friday we also have the PPI. So these are news that we have to be watching out for the coming week, whether we should know whether we are going to be trading this news or we should be avoiding this news. And it's best, as always, we are always advise traders, especially beginners traders who have no idea on how the news works. It's best to avoid the news, so you can avoid high spillages, you can avoid being stopped out, you can avoid blowing your account, because that's the period in which most traders, during the news period, you have successfully managed to build your portfolio to a very reasonable amount, and because of the news you end up losing your account. So there's no need. If you know you are not good in it, we advise you avoid the news. So with that being said, we're going to be going to our chart to see what we're going to be expecting for the week. On our screen here we have the DXY, which we're going to be starting from the daily time frame, and on the daily time frame we can agree that we are still trading below this lows and below this high, and we can all agree that DXY correlates with EURUSD, GBPUSD, AUDUSD, NZDUSD and USDPY. Whatever pair that has USD in it, DXY correlates. That's to say that even on DXY we are seeing a negative DXY. On EURUSD we're going to be seeing a positive EURUSD. EURUSD will be doing opposite of what DXY is going to be doing, and any pair that has USD at the end of the pair, for example EURUSD, GBPUSD, NZDUSD, would always do the opposite of what DXY is doing. So while pairs that has USD at the front of it is going to be doing the same thing DXY is going to be doing. Now, so on our screen here we can clearly see that we are currently in a bullish trend where we could see the market create series of higher highs. We look into this range here: higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and higher highs. Now you can clearly see we have this very complex retracement where the market gave a change of character and switched to the downside, creating series of lower lows and lower highs, lower lows and lower highs, lower lows and lower highs, and what lower low. At this point here, the market is creating a lower low at that level. So basically on our chart here on DXY, we have a demand zone that is at this level which the market is yet to mitigate. So on our daily time frame we have a demand zone at that level which the market is yet to mitigate, and we can understand that the market is still trading above this low and below this high. Now if you still look at this level here, you could clearly look and understand that we have a change of character at this point. So we have our change of character at that level. The way market took out that high and also took out these lows here. Okay, market took out that high and also took out that low. So we have a change of character there. So our expectations on DXY from the daily time frame, and you can clearly see that the market has taken out this structure to the downside, and we have our supply zone at this level. Our expectations on DXY is for the market to retrace back into this demand zone and probably push to the upside. That's what we can see on DXY from the daily time frame, for the market to give a push, probably push back into a supply zone at this level, they give a reaction and push back into this demand zone, because we clearly understand that we are still having our bearish correction. Okay, we still have our bearish retracement or bearish correction. We are yet to confirm our bullish trend. Now that's for the sell side, and for the buy side on the daily time frame, we want to see the market take out this high. So the market can take out this high and probably give a reaction there, then we can be looking for more buy opportunities. Now going on to our 4-hour time frame, we could place that this market is completely bearish. We could see the market create series of lower lows and lower highs. This high total liquidity at this level here: lower highs, lower lows and lower highs, lower lows and lower highs, lower lows And what are we expecting? Expectational order flow states that when market is creating series of lower lows and lower highs, the next expectation is for the market to also create a what? Lower low and lower high and lower low. So we're expecting the market to give a push back to this level and push back to the downside. Now if you look at the charts clearly, if you want to focus premium attention on the charts, you will clearly see that we have this change of character here, or we could call it a liquidity swing. Market swept out this liquidity at that level there. We have a change of character there. Market has swept out liquidity at that point and also swept out some liquidity at this level here. So that's what we have. And market is currently trading back inside this demand zone. Market is currently trading back inside this demand zone, which is giving a high probability for the market to push back into the supply zone and continue movement to the downside. So what we clearly see, we will see mitigation process occurring on our chart. We clearly see the market has mitigated that levels there, and as expected, the market has mitigated this point here that led to the change of character. You understand, the market taking out this high level. So we have currently mitigated this demand zone here and created this long week showing very strong rejection, and very market came to the downside and a very strong rejection. And the last candle still looks very bullish. Okay, it's showing a strong reversal. We go on the daily time frame, we saw a doji there, and doji is kind of a reversal candle. It's a candle that tells you, okay, yes, you're going to be buying. So what we're expecting is for the market to give a push from that level. Since the market has mitigated that level, to probably give a change of character on the 15 minutes time frame, or give a reaction there and push to the supply zone and continue going now. So that was our expectation on DXY. So the next pair we're going to be looking at is EURUSD. As we clearly see on our screen, we go to the daily time frame. On our daily time frame, we could understand that EURUSD is bullish, okay? Because if you look at the market, it's correlating with DXY. Look at the market, clearly see that this correction here is bullish. Overall market trend was giving this bearish structure. You clearly see from this level, the overall the market has been bearish, and we can probably be saying we are having complex retracement where we see this change of character. The market took out this lows and market pushing back into a demand, into a supply zone to continue itself. So currently, if you pay more attention on the present price data, you notice that EURUSD is doing completely different from DXY. Okay, why DXY was giving a bearish sentiment on the current price data, on EURUSD we are seeing a positive movement. There we could see we have the market with a higher high causing a change of character where the market took out this high, created a higher low at this level, a higher high at that point, a higher low at this point, a higher high, higher lows, higher high, higher lows, a higher high, and currently we should be expecting a what? Higher low to be formed for a higher high. Especially expectational order flows would always be in position. Now if you study our chart and look at what's happening, you clearly see that we have this break of structures at this level there. We are paying more attention to the current price data. We currently see that we have a break of structure at that level there, where the market took out the high there, creating a break of structures, and we also have a demand zone that is created at this level. Now the demand zone here, we're going to be covering all these highs that you can see here. So when market tapping, we can react from there. So basically on our chart here, you will also see the market taking out these lows here, this supply zone causing a supply demand flip. Okay, we have this demand zone here that market took out, correct, which would most likely cause a supply demand flip. That's giving much more objection that we want to see market push back into the demand zone and continue going to the upside. Okay, that's what we are seeing on the daily time frame on EURUSD. And for our sell side opportunity, one for a sell, we have to see the market take out these lows completely, give a reaction, and continue push to that. So now if you look at this level here, you can see that this supply, this high that was created is not reacting to any reasonable level. We want to see the market probably push up to this point here. This high that was created is not reacting to any clear level. This is the clearest and most best supply zone that we can be using for the chart. So you can see the market taking another high, which means what we are going to be expecting for is a push to the downside, react to the demand zone, and continue going up. That's for what we are seeing on the daily time frame. And on our 4-hour time frame, we go to the 4-hour time frame, you will clearly see what the market, we have this low that was completely swept causing a change of character. We have this long wick that was created at that level there that could clearly see our market swept out to call liquidity at that point there. So most likely what we are going to be expecting for the week is this week here is clearly showing rejection. This week that was created here is clearly showing rejection, which I think should be reacting to some sort of levels at that point there. Market didn't really mitigate it. Wow. So right here, what we're going to be expecting is for the market to give, since it has given this clear rejection of candlestick, to give a push back into this demand zone and continue in the buy side series. That's what we are seeing on EURUSD. Now that's what we could see on EURUSD. We're gonna be going to the next pair, which is GBPUSD. Like we did in the last three pairs. So in the last two pairs, we're gonna be starting from the higher time frame, which is daily time frame. And on our daily time frame, if we could pay more attention to what is happening, we could pay more attention. We are going to pay more attention to what is happening inside here. We could clearly understand and all agree that we are in a bullish trend, where you could see the market create series of higher highs that give the same sort of pattern that we saw in DXY and EURUSD, where you click the market create series of higher highs, higher lows, higher highs, higher lows. It still comes back to mitigate structure. So we have a higher low, higher high, kind of a higher low, but not really clear. I would have preferred if market came back deeper and give a push to the upside, but we can call this a higher low, higher high, higher low, and a higher high. Now what we have here is a change of character. Market is currently trading inside the demand zone that's created. So if I could add my tools on my chart, you clearly see that market is currently trading inside this demand zone at that level. The demand zone was created at that point there, where the market scout is higher and gives break of structure. So we could do GBPUSD to see the market give a push back into the supply zone, give some sort of reaction and continue going, some sort of reaction and continue and come back to the market. Because what we have here is liquidity of swing. We have liquidity at this level there. We have liquidity at this point there, which the market is. So once the market gives a push back to the supply zone, it takes out liquidity and we are good. Now, what if the market decides to react from here directly down to the downside and possibly take out this low? There's high probability the market would react back to this level and also push back. That's one of the probability, and also a high probability that the market would push from that level and take out the low. Now for our sell side possibilities would be when the market has taken out this low. Market takes out this low completely, then we could expect sales on this level here. Market take out these lows, give a push back into a supply zone that would have created it and let you take out the lows, then continue our sales. So apart from that, because we are still above these levels there, we are still above these lows here. We are currently still above these lows here. What we are expecting is for the market to push back into the demand zone and continue moving to the upside. So that's what we are seeing on GBPUSD. Then move to the next pair, which is GBPJPY. On our screen here, we have GBPJPY. That's the grade between Japanese yen, and we are going to be looking from the 4-hour time frame. Sorry, from the daily time frame. On our daily time frame, we could understand that we were in a bullish trend. Okay, where we could see the market create. We have this strong push, impulsive push that up to the upside. We have a very strong impulsive move out of a range that was created. We had the range here at this point. We have the range here where this was kind of liquidity sweep, where the market got liquidity, and we also have a range at this level there. So after the range was created, we could see this strong push out of the range to the upside, and what we can currently see, focusing on the present price data, is the market is still trading inside this range. So we have a range here where we can identify our highs at that level, our lows at that level, and our highs at this point. So we are currently trading inside this range. The market is yet to take out these highs or take out these lows. That's why I say we are currently trading inside the range. Now, if we want to put in some technical tools on our chart and try to read our price data, we will all agree that we have this break of structure to the upside where the market took out these highs here, and we also have the demand zone at this level where the market was currently mitigated. The market mitigated the demand zone, took out this high, came back to mitigate the demand zone, and also went ahead again and took out this high now. So if we could put in some structure, some our technical tools into the range, we could clearly see a little bit of price data happening. So what we have here, we currently have market currently trading inside this demand zone, giving that strong reaction and push to the upside. So that's what we could see on our daily time frame. Our daily time frame, I'm still expecting probably a push to take out these highs completely, return back to the demand zone and take out these highs here. That's what I'm expecting on my daily time frame. And for the 4-hour time, for the sell side, that's for the buy side. For the sell side, we could see the market give a push into this level there and continue going to the downside. So that's for the sell side. But the high probability trade that's going to happen would be the buy side. That's the high probability. The trade with high probability is the buy side. Now going to our 4-hour time frame to see the market clearer. On the 4-hour time frame, we could clearly see that we were in a bearish trend. Okay, we clearly see we have this strong bearish retracement where we have this lows that was created. The higher low was created and created a higher high, and after the higher high was created, what the market created a lower low, which came to this level here, gave a very strong rejection, a push to the upside, created another form of lower at that level there, and gave a push to the upside and still respected this low, came down, respected respected that highs, came down, also respected this low, and currently we have what, this strong push that to the upside. So if you put in our technical tools on our chart, we have our highs to be identified. Was at least set at the high? No, it hasn't. So we have our highs at that level there, and we have the low that was set up, giving a change of character at this point there. So what we are looking at after the market have taken out the high and taken out the low, we could see the demand zone at this level there that we see the market currently reacting. So what we are expecting, what we can clearly see on our chart is the market has been trying to break out of that supply zone at that level. Market is currently inside the supply zone and is given a very high probability that it's going to take out that high. So once the market take out that high for GBPJPY, it takes out the high, give a push back into the demand zone, then our buy setup is confirmed. We can start buying from that level there. But for now, there is no yet confirmed entry on the pair. So that's what we can see on GBPJPY. We move to the next pair, which is XAUUSD, and we'll be ending the session with US30. So on our screen here we have the XAUUSD, which is gold. XAUUSD on our screen, and if you look at the chart here, you can clearly see that for the past period of time, XAUUSD has been stuck inside this range. This was our first push out of the range. So on our screen here, we can clearly see that XAUUSD has been finding difficult to break out of that range. We have the first touch, which was in 2020, 2021, and 2023, and he finally had enough momentum to take out the high. So on XAUUSD, which is good, we're focusing on the present price data. We can clearly see that we have market basis of higher highs and higher lows, higher highs, and yeah, that's a higher low. And what, yeah. So what's the next thing that we're gonna create? The market needs to come back and create a what, higher low. So on XAUUSD, we could put in the technical tools on our chart. We can clearly see that we have a break of structure at this level here, where the market took out that high, causing a break of structure at that point there, and market currently we have our demand zone at this level here. We're gonna be taking that demand zone. We have a demand zone at that level there. So if you put in the what's happening here, you can clearly see this candlestick. We have a very clear rejection after the market took out the high and reached the highest high for the past 3 years. It reached the highest high. That's the peak point of the price for the past 2 years of 2152. 2150. So what we have, we can clearly see this clear rejection and the strong push to the downside, retracement, and expectations is for the push to continue going downward. Now that's what we can see on XAUUSD on our daily time frame, but the sales are not yet confirmed. The sales can be confirmed when the market take out this low here. So the market takes out that low, we're going to have a change of character, and what we're going to be looking at how the market takes out that low is to push, react back to that level, and come down. That's what we're looking at on XAUUSD on the day time frame. Now, if you want to look at the buy side scenario is for the market to come back to this demand zone and push to the upside, or for the market can also probably react to somewhere here. This demand zone, there's demand zone here, react to the demand zone and take out this high. But the high probability of happening is to see the market. The high probability of happening is to see the market push down, take out this high, and continue down. So that's what we are seeing on XAUUSD on daily time frame. And if we go to the 4-hour time frame, on our 4-hour time frame, to pay more attention to price data on 4-hour time frame, we could clearly see we have this long rejection that happened. We have a long rejection, and we also have a supply zone at this point here, which the market is currently reacting to. We also have a supply zone at that level, which the market is currently reacting to, and we have a change of character here. All these confirmations are giving more reasons why we should be expecting sales. We have a change of character here that swept out market, swept out liquidity that was created at this point here. So we can clearly see on XAUUSD or gold, we're going to be expecting more sales. We're going to put in focusing on what's happening presently. We could understand that we could all agree that we have a market took out these lows here, giving us a change of character at that point. We have a change of character there. The market came back to mitigate. Market mitigated this level there, and market pushed and mitigated this this supply zone that led to change of character. Market mitigated supply zone that led to change of character and have this strong rejection. And what happens after a strong rejection on XAUUSD? You clearly see we had the rejection here and created long candles at that level there. Clearly look at the past, the same thing happened. So what we're going to be expecting for XAUUSD is for the market to continue pushing from that level down to the downside. The market continue pushing to the downside, and most likely it needs to sweep out the liquidity that was created at this point here. The liquidity that was created at this point here. The market needs to sweep out liquidity. Now for the buy side scenario, the same thing I see. The market can decide to react to this demand zone here and go up to take out that high there. Market can decide to react to that demand zone and go ahead and take out the high. But which high? From looks of things, is very on low probability. So the high probability trade on happening on XAUUSD, high probability swing trade, is to take a sell from that level down to the demand zone. So that's that on XAUUSD. I'm going to go on our last pair, which is US30, to see what we're going to be expecting for the week. On our screen here we have US30, and on US30 we clearly see that market finally took out these highs here. Okay, after how many, almost a year, market finally took out this high. So what we currently have, focus on the present price data, we will all understand that we will clearly see the market creating some shades of higher highs and higher lows, higher highs and higher lows before this strong push to the upside. So on US30 we will clearly see we have not yet confirmed what the market is doing, but we will understand that the market has taken out a high, and after the market has taken out the high, the market needs to give a complex retracement back into a demand zone to give it momentum to continue with its original intention. So what we're going to be expecting on US30 is to see a push back into some sort of demand zone, probably the demand zone at this level there, a push back into that demand zone, and the market is continuing to the upside. That's our expectation on US30 because we are yet to confirm what's happening. But if we could zoom out on the chart, there's also a high probability for the market to react to this level there, because we clearly see we have a change of character there. Zoom out of the chart, we have a change of character there. There's a high probability market will push back. Market currently reacting to the demand zone and is giving a very strong rejection. A high probability for the trend to continue moving to the upside because we don't have any signs. So for now, with the sell side is not yet confirmed. The sell side is not yet confirmed until we could see a change of character or a shift to market structure. Or to this market take out this lows here, probably market take out this lows and give something of this nature, then that's where we could say that our sales are confirmed. But currently we are still going to be expecting more buys from here. Yeah, currently we're going to be expecting more buys from there because we are yet to confirm our sales. Now on the 4-hour time frame, will give us more insight and more view of the chart. So on a 4-hour time frame, we will understand that we will clearly see that the market has taken out this high here, where we have this break of structure to this level there. Okay, market has taken out that high. We have a break of structure at that point there, and you understand refining our levels. You will clearly see the market reacting to a demand zone here. If you want to refine, you give a quick reaction to the demand zone, and still looking at the chart, you understand that we, on a 4-hour time frame, looking at our chart, we clearly see we have this when market scored this high and came down to scored the low. That's the change of character. Market retraced to react to the supply at that level there. Continue, it pushed to the downside, came back again and mitigated the supply level at that level there. Give a push to the downside. All that we expecting, institutional order flows will remain. Market is currently reacting to the supply zone, creating a dodgy position in the market, which can also be used as a reversal count. So a push into this supply zone, and we are expecting more push to the downside. What we will see is the market is currently reacting to this demand zone, looking for volatility to push down and continue with its original intention or trend. So on US30, you're going to be looking for sales, but our sales are not confirmed. We could enter a sell from that point and exit at this level to be safe. That's for day traders. But the most likely probability, because we are still above this demand zone, is for a push to the upside. Only when the market takes out this lows here, market has taken out this low here, then we could completely and we could say we are bearish. We could have more intention of being bearish. Market takes out this low with a very strong candle, then we could expect more sales. So that's on US30, and we hope you learned a whole lot of things throughout the session, and we'll see you guys next week, same time, same channel. Don't forget to hit the like button and subscribe to the channel if you haven't done that. Hit the like button and subscribe to the channel. See you guys next week.